Welcome everyone. Live the Return TV. All right, today we're going to do something just a little bit different. Start with an analogy. Trading is very similar to going to a mall and trying on clothes. All right. All of life is this way. Try it on. You walk into the store, you find something, you try it on. If you like it, take it out of the dressing room with you, go to a counter, pay for it, and you're out of the store. You don't like it, you leave it in the dressing room, hand it to a worker at the department store, and you don't think anything of it. But sometimes you really like it, and you'll actually walk out of the store with it on. Everything we do in life is the same way. Try it on. See if it works. That's exactly what I'm doing with this stream, is I'm trying on what works. Not because I don't know what to do, not because I'm confused, but because I'm trying to figure out what works that allows me to do what I do live. And puts me in a mental state that supports me while I'm doing it. And so that's where I'm at. And for me, it's a beautiful thing. I apologize for any of you that maybe it's confused or anything along those lines. I'm not changing up what it is that I'm doing. A stream needs to be quasi-educational, entertaining, a show, right? In order to get individuals interested in watching it. And why do I want individuals to watch the show? Because I really feel like I can help developing traders learn to become profitable. Not by following my trades, not by teaching a methodology like I thought maybe I was going to, but to really start with the true basics. And I'm not talking about reading candlesticks or confluences or EA or moving averages, crossovers, and MACDs and technical or fundamental information and news and all of the stuff. We have to first realize why trading is so difficult. And this is where I can start helping individuals. We stop seeing trading as a result. We start seeing it as performance. If you really sit back and you think about it, there's about as many really good, profitable traders, consistently profitable traders as there are professional athletes in the world. Okay? And I'm not talking about G League and different things on those lines. I'm talking about professionals. Okay? NFL, NBA, F1 racers. Okay? Not ARCA and all the other stuff that's out there. The F1 racers themselves. We're in a very unique situation because we're trying to become one of those top individuals, but we're doing it trying to achieve a result of profitability. Are these professional athletes, are they trying to do it for a result? Sure, possibly a cup or a contract or whatever it might be, right? When I say cup, a trophy. But they're there in the business to develop skill set. And this is where trading becomes very similar. Because we're here to create a skill set. But a skill set of what? Of reading indicators, of creating an edge. What is the skill set? The primary skill set for a trader is this. The problem with trading is that every single tick provides an opportunity. an opportunity for a potential entry. And if we're looking for results, we constantly see every tick as a possibility for an entry. This is where we revenge trade. This is where we emotionally trade. This is when we try to force trades. It's not because our plan doesn't necessarily have an edge. It could be not, but that's a skill set within itself. We do not treat the markets as it truly is, as a rule of the game. Every single professional athlete out there plays a game, and there are rules to that game, which creates parameters for the game, which allows them to figure out what skills they need to learn to play the game well. What are those parameters in trading? You ask that question to every single trader, and every single one of them is going to give you a different answer. Maybe some similar, but it's all going to be different. Why? Because there's more ways to trade than there are people in the world, and it's always going to be that way. You have 50 billion people on this planet, and there's going to be infinite ways of trading the markets. You can't fill up the planet with enough people to equal the infinite ways of trading the markets, because the markets is a boundless opportunity machine, tick by tick, every moment it's open. That's the rules of this game. That's the only rule, because that's the only truth that's true for everybody. Now, the question is, as a professional elite former, what are you going to do to limit the opportunities to only what you're looking for? And that doesn't come from technical analysis or creating a plan for your trading. That comes directly from knowing exactly what it is that you want and why you're trading. Because when you answer that, you have your reason. Your reason is your sport. And the markets is your field. And so when you know your sport, you can create rules around that sport and apply it to the field you're going to play it on. If you are a developing trader, I hope you hear those words, because I wish in 1998, when I took my first day trade in pork bellies of all markets, that somebody would have been able to share that with me. And at the time in my early 20s, I would have been open to hearing it. Because if I was, and they did, it wouldn't have taken me so long to develop into the trader that I am today. And what kind of trader am I today? Well, you're about to find out. And you can judge my skill set, my professional performance for your own views. What kind of trader am I? Honestly, auction market theory. I have been focused on auction market theory since 2008, when I first got picked up by a prop firm. Not one of the prop firms that you know of today, an actual prop firm that was, deemed illegal by the Dodd-Frank Act of 2014 after the debacle of 2008, which I was a part of in commercial investment banking and as part of in creating. So you're welcome. And I do apologize if you lost money in 2008. What I was doing was part of the problem. Risk tranches of commercial mortgage-backed securities, securitizing them. And what I hope that I can help you do is to, one, see the trading as possible. Okay. Two, not to teach you to trade the way that I trade, but for me to trade and answer questions in a way that helps you find your edge based upon why you're trading or why you're interested in trading and what trading is going to do for you. All right, I'm off my soapbox. Let's get into the markets and see what's going on. I have a daily chart up here real quick because there's something interesting going on here, and I wanted to share this, guys. Let's share this with you. I don't, to be completely honest with you, I don't know exactly what it means, the markets, in terms of what the markets are going to do, because I can't even tell you what it's going to do in the next tick. How am I going to tell you what it's going to do 10 ticks from now? Okay, because price action develops tick by tick by tick. And if I can't tell you for sure if the next tick is going to be up or down, then I can't tell you for sure what the next 10 ticks are going to be. That level of unknown and lack of information is why I trade the way I trade. And in here, I am not going to trade auction market theory. Okay? I'm going to be trading momentum. And they are going to be quasi scalp trades. You will see why once I get in and I start doing it. There's no sense in explaining it. I'm going to demonstrate it. But these trades can be taken and turned into day trades, swing trades, and all sorts of stuff. Okay? So yes, it is a scalping methodology. Okay? And this is why I trade it. This will give you an idea, kinda, hopefully, of what it is that I am doing. I'm going to share with you my stats from trading the New York session this morning, if I can find them. This is taking forever. Okay. Get this. All right. I had 19 total trades. 8 of them were revenue. What's a revenue trade? A winning trade. I just don't like saying winning, losing, right, wrong. Right and wrong, they're triggers for me. And so I try to use language that is not aligned to my triggers. So revenue trades are 8, expense trades 11. I traded at 42.1% accuracy today. 42.1%. What were my net results? 176 points trading one lot. What's a lot? A contract. 176 handles. What's a handle? A point. Not ticks. Full points in the NQ. My average revenue position was 30.53 points on a one lot scalp. My average expense trade was 6.2 points, giving me a risk reward ratio of a 4.9 to 1 with an initial stop placed of 20 points. My average was 6.2. I had multiple expenses of 1 tick, 2 ticks, 4 ticks, and 5 ticks. And I had 3 very large expansion trades of 38.25 handles, 51.75, and 78.5. So yes, I am going to be scalping. Yes, I am going to be trading a lot of trades. But what I'm going to be showing you and demonstrating is not my entries and my exits. They're whatever. It doesn't even matter, really, to be honest with you. I'm going to teach you money management, not just risk management, money management. If you think about it, here's another truth about trading. The second truth number 2. Maybe this will be chapter 2 of the book I write, in my grave. I don't know. Who knows? What is chapter 2? When we're trading these contracts in the futures markets, maybe stocks, okay? 100 shares of stocks, you own, that percentage of the company. Okay, you're a shareholder. Beautiful. Great. Contracts, you're not. You're trading a dollar value, but you're not trading that dollar value. You don't own anything. And even when it comes to shares of stocks, you don't own those either, especially if you're shorting, you're borrowing them. And you have to pay to borrow them. Oh my goodness. It gets so convoluted and confusing so quickly and expensive. So what are you actually doing then? If you don't own anything, then what are you trading? You do own something. The moment you click the button to enter the market on a buy or a sell, you own. Right? That's what you own. You own risk. And your job as a trader should be bleed risk out of the market as quickly as possible before the market bleeds risk out of your trading account. One way or another, somebody's bleeding. I let the bleeding happen on the market side, not my side. If you don't like the analogy of bleeding, I apologize. I was a jarhead. Give me a break. If anybody's hungry, I've got plenty of crayons and Elmer's glue. If you're a veteran, you know exactly what I'm talking about. And the rest of you that don't, I'm just basically saying jarheads, we're not exactly the sharpest tools in the shed. So be very careful what you ask me because, I may probably not have the answer. The point is this. Is it possible to trade the markets consistently and create revenue? Yes. Does that mean that you're able to beat the markets? No. Because long-term trading and day trading play by completely different rules. You can't compare the two. If somebody can turn around and say, okay, well, you know what? I can make $100,000 on the markets every month. That doesn't equate to a percentage. That doesn't equate to a rate of return. That's income. That's revenue. Okay? When you're in the stock market and you're in investments, there is no revenue. There's a return on investment. Yeah, you can say, well, I have X amount of dollars. Beautiful. But it's all on margin. It doesn't mean anything. All right? And so there is no rate of return. There is no return on investment. It's absolutely the wrong way to look at trading. Okay? You have an investment account because you're an investor. You have a trading account because you're a trader. Two completely different things. You're not an investor, you're a trader. You own a business. Investors don't own the investing business. They just put their money into an investor who, is part of the business, or a bank, or whoever it might be, and they leave their money in there and they're done. Or a mutual fund through their work, through a 401k or whatever it might be. Somebody else is managing that. Okay, that's their business. Your business as a trader is to run the business of a trader. And a trader's business is not to hang out with your friends in some office, laughing and joking and having a great time, expecting yourself to take trading seriously. If you want to have a good time, beautiful. If trading is a hobby for you, live your hobby. But if you are serious about becoming a professional performer in the market, you have to change the way you view business, the way you view the game. LeBron James, Michael Jordan, Kobe Bryant, when they were young, they used to party and do all sorts of stuff. We all know Kobe put up for charges for that, right? When he was number 8, he became a whole new number and a whole new player and a whole new person. Why? Because he had to grow up to see the truth of what was really going on and what it means to be a performer at that level. Remember, there's only about as many profitable traders in this world, consistently profitable traders, as there are professional athletes in this world. There's only a few profitable traders that are doing extremely well. And that's about the same number as the superstars in those sports. And now my question for you is, what are you here to develop into? And if this is a hobby for you, this is a game, this is something to do, beautiful, play your game. But if you are serious about this industry, you are serious about your business, you are serious about being a business owner, you are serious about your performance, then it's time to start learning the rules of the game so you can develop into the professional performer that you were meant to be. What I'm going to show you is what a professional performer does. To do that, I have to trade my charts. So on this daily chart, what's interesting about this daily chart? This little peak of volume here. Okay, all-time highs, what they call them. Auction market theory, we're exploratory highs. Why? Because we're exploring fair prices. You know, all-time high, as soon as you break the all-time high, you have a new all-time high. Okay, great. So we're trading at all-time highs. What does that mean? We're trading at all-time highs. We're exploring price. It means that eventually we're going to find balance. Price exploration all the way through, continuing all-time highs until you come up, you create an area of balance. You create a volume point of control where the most trades have traded around for this developing area of balance, developing area of balance, developing area of balance, developing area of balance. And look at the difference. Look at how much more volume developed in this area comparatively to this area. Even though we went sideways, creating value in this area. Then the market went back into exploratory highs, all-time highs, if you will, create another area of value. Now we have one large volume node of volume developing. Interesting. What does it mean? I don't know. What I do know is this. Price action right now is trading in a tighter range than it has been. And this proves that. Price action is trading more in this area than anywhere else, which tells me that around this price area, it's like coiling and coiling and coiling. What happens when you coil a spring or you compress it enough? Eventually, and that's what I think is going to happen to this market. Going to pop. I don't know which direction. I have no idea, and I'm not even here to try to figure it out. I'm going to show you why tonight in my trading, why I'm not here to figure it out. I don't need to know what direction the market's going to go. I don't need to have bias. I don't want a bias. I'm going to show you why. Let's get into the charts. I'm done talking. It's time to trade. What I need, momentum. This, not momentum. This is volatility and momentum. And there is a difference between volatility and momentum. Huge difference between volatility and momentum. What's the difference? Volatility happens all at one time. Okay? Volatility is quick swings in a direction or multiple directions. You want to see volatility? Go back to your charts. I don't know. Well, it's been a while since I've actually watched live charts. Tomorrow, FOMC meeting minutes day. That's not a good day. When the FOMC meets for interest rate changes, before you were in the 90s, right? In the early 2000s, you knew what they were going to do. You knew the guidance. Okay. Excuse me. What it means by you knew the guidance is you knew what they were going to do with their rates, or you had the briefcase indicator with Alan Greenspan. And those of you that haven't been in the markets that long, I do apologize. But when it comes to FOMC days, there would be huge swings in the markets. I mean, literally, it would move up and move down rapidly, like oil or heating oil would do around their large news events. That's volatility. You can't trade that. It moves too fast. Momentum is incremental ticks moving in one direction, not as fast as volatility, sequentially. What I need to trade is momentum. I do not care about direction. I just need momentum. This, great example. This is what I need to trade. Sorry, TikTok. There you go, right there. Can you see it now? Yeah, this is what I need to trade. This. And I will get those. That's how I got a 70-point move today on a one lot contract. Because I'm quick bleeding risk. And what does that mean? Well, hopefully we'll get a position tonight and I'll show you. Right now, there's no momentum in the markets and I am not interested in playing. Because what some people call this as, what some people will say, well, this is chop. Well, what does chop mean? It means that the market's doing something that you can't define. So you call it chop. Sideways price action, chop, whatever. The market's doing something. The market is absolutely 100% doing something. Right now, in the short-term market, the market is in an uptrend, making higher lows and higher highs in a value-based condition with a short-term breakout to the upside that has not been confirmed. That's what this market's doing on a 2-minute time frame. That's it. Okay? It's not choppy. It's not sideways. It's telling us what it's doing. What do you do with that information? You decide if that's a market condition you trade. Oh, well, the market's choppy. I can't trade that. Sure, you can. You have the right methodology? 100% you can. 100% you can. What would you use for that? Order flow, footprints, heat maps, whatever you want to use. And you get in off of rejection. Because what happens a lot of times when the market is choppy or trading in a tight area of value, you get a lot of wicks. And what happens when you get wicks? You're showing rejection. When you're showing rejection on both sides, you're in a market condition that doesn't have a lot of direction. And a non-directional market usually does not have momentum. But you can 100% trade non-trending markets or tight rotational markets and utilize tight stops and tight targets. Depending on what your range is, your targets might only be a point or two. Okay? Not a lot. But what is your risk at that point in time? 2 ticks to a point. How do you enter 2 ticks away from the market? Oh my God, that sounds insane, right? Look, not difficult. I'm not saying that to be condescending or anything else. It's not my intention. I'm saying we make trading more difficult than it has to be. We use these. Yeah, look, momentum. Momentum is starting to come into the market. I like this. Let me watch this. because this is an important bar right now. I want to see how this bar closes, because right now we have a very small wick, and I want to see this bar close in the top 1/3% of the bar. If it closes within top 1/3%, we could be looking for a potential continuation play. I don't want to trade it until this bar is done, because we could easily get a rejection wick from these highs. So I'm not trading this right now. And I didn't get into it because we didn't have momentum into the market. I would have had to trade each one of these bars and taking either small expenses or break-even trades, because I would have to take a trade in each one of these if I'm going to take this, because I don't know when this bar is going to happen. That makes sense to everybody. You don't know where the breakout's going to take place. So what am I looking now? I'm waiting for this market, not this market, but this bar, sorry. I'm waiting for this bar. Retrace. And I'm looking to get in the direction of the breakout, the direction of momentum. Right there. Immediately, we're going to bring risk and see how I'm bleeding risk out. Made a little bit of a higher high. It's okay. I got stopped out. It's fine. Okay. That's one of the expenses. What I'm looking for is for this to pop. We broke the close of this bar. Could I wait for the high to break? Sure. But if this is going to go off of a market order, I'm going to be taking some slippage. So I took a shot. It didn't work out. I had a 20-point stop to start with an entry at 19.5. If this thing goes down to 09.5, I'm down, which it very well could, just off of a retracement. There you go. See, you're stopped out with a 20-point loss. What did I actually take? 19.5 to what? 23.5? 4 points. 4 points. I'm down $80 instead of $400 because I bled risk out of the position immediately. What would happen if that thing took off? I would continue to bleed risk out of it until what? Until I'm out of the position. That's what I mean by bleeding risk. That's what I mean by managing risk. I'm not taking a large 20, 40 point stop in the NASDAQ. Oh, well, tell you, you're going to get stopped out all the time. Sure. 41% of the time, maybe 35% of the time, maybe even 30% of the time. I know at 41%, I could be up 171 handles. Who else do you know is up 71 handles in the market today? I'm not saying that to be arrogant. I'm saying that seriously. I'm not concerned. And I know some of you will have arguments about that. So now what we're going to do, we're going to take this to the downside and see what we can do with it. All right. Again, look at this. My stop was all the way up here. Look where it's at now. And look, it's coming down in our direction. Already revenue in the position. Right there. Revenue. How much? I don't know, nor do I care. All I know is my stop is below my entry. And what did I wait for that time? For this low to be broken. Why? Because that's where the momentum is going to enter. I don't want to enter here. I want to enter down here. And so now you just wait. See what the market's going to do for you. I have no idea. Did it stop me out? 100%. Do I care? No. What I care about is this low being taken out. When this low gets taken out, even by a tick or two, I'm already moving my target or my stop because I don't have limit orders. I don't care about limit orders. I'm not guessing where I'm going to be getting out of this market. I'm not looking for a 1-to-1, a 2-to-1 risk reward ratio. I'm going to take what the market gives me. And right now, the market's giving me this. Oh, wow, look, the market's now giving me this. Okay, there's some support right here, or resistance, excuse me. Some more resistance here. Quicker market, we got some volatility. This isn't just momentum here, this is volatility. Okay, which is good to see and good to know. All right. And let's see if this holds. And nope. Oh, stop me out. Rude. But guess what? 95, 99 and a quarter. I mean, what? 4 and a quarter. I'm basically back to what I made here because we just didn't get quite the range extension, that momentum. But if we had, this would have happened. I would move my stop, 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 and I'd be stopped out someplace down here. From a 64 to about a 16 entry. 80 ticks. But this is fun. We got some momentum in the markets. We can trade this. Do I have a bias? No, I don't care. It doesn't matter to me the direction of the market right now. Okay? I'm not here to guess the direction. I'm not here to guess where this thing is going to go. I'm here to read price action and momentum and allow momentum to make everything work out for me. My skill set is to be able to recognize momentum and to know how to manage my risk within momentum, period. And if I can do those three things, I can create a professional skill set, a professional level skill set around those three areas. And if I do, I become a highly, highly, highly professional and efficient trader. I'll give this one just a little bit more room. We have resistance here at 04 and a quarter. See if we pop it. Looking for 1 or 2 ticks above that. Take a little bit of a bigger expense here. That's okay. 5 and a quarter. Stopped out. So what do? Oh my God, it took an expense. Oh, I'm down 5 points. What do? Oh my goodness, we should go short now. No. The market tell you what it's going to do. So I decided not to move right there at that one point in time. Okay, but if it would have moved, I would have been in it. And if I'm in it, there's a possibility for 30, 40, 50 points. Do I care if I take 15 points in expenses in order to hit that 30, 40, 50, 60, 70, 80 point move? No, not even the slightest. It's called trading, boys and girls. This is called trading. I am not looking for just any random entry or anything along those lines. I am looking for specific setups, and I'm trading risk management around those setups. That's all I'm doing. And if you wanted to be a prop trader and not do this in cash, oh my God, you can keep your risk down to 4 or 5 points in the NASDAQ, where most people say that that's impossible to do. And you're going to do great work in your evals. Not only are you going to do your evals, but you're going to get more funded accounts. And there's a possibility too that you're not just going to get the funded accounts, they're going to give you a live account because you're so good at risk management. Well, Tony, why didn't you go short here? Why didn't you go short there? Well, why not? Why not? Didn't feel like it. It's not my area. I don't want to play right there. We're inside bar. Inside bar, possible indecision. I am not interested in playing right now until we have some form of breakout. Why? Because momentum isn't going to happen here. It's not going to happen here in this little area. Momentum's going to happen someplace outside of here and someplace outside of here. Someplace maybe even outside of here. That's where momentum happens. But am I taking, an entry without a stop? No. Why? Because it's not going to help you guys, because most of you are going to be doing the prop stuff. You're going to be doing evals. You can't have a 20, 30, 40 point stop in the NASDAQ and think that you're going to become profitable. It's not going to happen because your risk is too wide and you're going to get stopped out. You do that twice in a row, you're done. You've already blown your account. You have to have very tight stops. And to have very tight stops, you have to have strong market fundamentals where it has a chance to move in your direction after entry. And if you don't have that, good luck. I wish you luck. Not impossible. I just didn't figure it out over 28 years. Yeah, I'm down, what, 5, 6 points right now? A little less than 6. There we go. Immediately bleed that risk out. Bleed that risk out. Oh, that wasn't very nice. Well, now I'm down about 10 points. Oh, I pushed the button because it broke and I just didn't even realize it was all the way down there. This one, I'm going to give a little bit more room. Now we got to the entry and look, now I'm bleeding risk out. I went too far. That's my fault. That bar was absolutely crazy. It's all good. Now down 12 points. I bled that one out a little bit too much, but I'm grateful because now we're back up here. But that was a wild, wild bar. Very, very difficult to trade that bar. And the NASDAQ will do that to you sometimes, but what did I get hit on that? 4 points? Okay. No, I haven't had a revenue position yet tonight. All of my trades so far tonight have been expenses. And we'll add another one to it. When do I stop trading this? My risk, dang it. I need to wait for the next bar. I can't enter into a bar again. I need to wait for this to close. I'm trying to guess. Right now, I'm looking at basically when I'm down 30, 40 points, $600 to $800, $600 to $800 on a $150,000 account. You can have 4 full expense days in a row before you're in trouble in the account. Yeah, this thing just popping and not giving me any room whatsoever. I don't like it. If this one stops me out, I'm going to be done for a little bit until this market starts behaving in a normal fashion. These gaps that it's doing and just the little pops like this, I don't like it. I don't like the conditions. I'm going to leave my stop here, giving this a little bit more room, see if we can get back down below the open of this bar, and then I'm going to start bleeding risk out. 85 to 77. See, right there. Boom. And we have some resistance right there. So I'm already taking a couple points out. I'm looking out for another down. Do we get it? Nope, we come back up. I didn't take a lot of risk out there, but a couple points, it means something. I'm trying to give us a little bit more room. I do like the downside. I do like the way that this bar closed right here. There we go. See? Take a little more out. Oh. Take a little bit more out. Did we get down? Oh, come on. Drop. I'm not saying drop because I want revenue. I'm saying drop because I want my break-even paid. Gives me another trade for tonight. Beautiful. Yeah, I mean, out of all these trades that I've taken, none of them have really gone in my favor yet, and I'm down 58.74, so 15 points, roughly. That just sucks. That just sucked. Nah. Yeah, this will be my last trade. I don't like how this market's jumping. And that was a full 20 point because I just couldn't react to that. In this London session, I have to watch this, okay? Because I have not traded the London session like this, the Asian session like this, other than last night. Last night I was up 67 points, 67 handles. It didn't do this. And so I don't know if this is a normal Asian or not. I'm going to have to watch this, but I'm going to continue to wait this out. And then I'm going to start trading it again around 8 o'clock in when the London session opens, because that's where I traded this last night. I haven't traded it yet around the 7, but this is just way too jumpy. Way too jumpy. So we'll wait and see. And that's the other thing too. This is actually a very great demonstration. Remember what I was talking about in the very beginning. You try things on, and it's like going to the mall. If you don't like it, you don't have to wear it. And you tried it on and you don't like it. What? You're going to blame yourself? Oh, wow. You're going to judge yourself. You're just terrible for even putting that on. It's unreasonable, unfathomable to even think that you would do that. Well, it's just as unreasonable and fathomable to try to do that here. The same thing. I'm not going to berate myself or judge myself for my actions in this market tonight. I think I've done a phenomenal job with what the markets have given me. Phenomenal job. And so then I go back and I take a look at the results and I said, okay, are these the results that I want? No, they're not. Okay, well, what caused the results? Well, this was a big part of it right here, right? And just the continuation just isn't there. There's still a lot of wicks in here. Is that because of this market time frame? The open Asian? I don't know. Don't know. We're going to find that out over time. But in the US session, getting in here, you've got, or getting in here, you've got room for this. It doesn't do this to you. You're entering here. It's not, you're entering here instead of all the way down here. You got room. This isn't giving me any room. Not on these breakouts. And so, yes, I am entering another one. I really want to demonstrate what it is that I'm talking about here. Okay, moving that stop. People will be like, oh, you can't move the stop up that fast in the NASDAQ. You're going to get destroyed. Oh, look. See? Boom. Break even. I'd already have a little bit of a revenue popped in here if the market would have stayed up there, but it popped back too quick. There's a break even. Yep, this right now is not tradable, so I'm not even going to continue to try. I'm waiting until the London session and we'll go from there. Great time to ask questions. Anybody have any questions? And no, I'm not trying to explain my expenses away. I'm not trying to do anything else. I'm trying something out. This is the third stream that I've done. This is the second time I've traded the Asian session in this market. I've traded the Asian session multiple times before. Australian dollar, the Japanese yen, all kinds of futures and currency pairs. I used to run a trading room back in 2008 through 2012 with over 200 people in it. Been around. I have been around. I traded the flash crash day, made 60 points out of it. I was in like way close to the high. And only got 60 points because it freaked me out. It just dropped, and I was like, man, if it drops that fast, it can go up against me that fast, and I just wanted out. I didn't trail, I didn't do anything else. Only made 60 points out of 1 or 2 ES contracts. My best day in trading, I was trading SPOO, which is the main index before the minis were created. S&P 500, the main index at $250 a point. I made $7,800 in one day, trading one contract. I had 32 trades that day. I've taken multiple accounts and turned them into large dollars. I've blown up accounts, absolutely 100% blown up cash accounts. You know, it happens. Trading is unpredictable. My biggest problem was I always had a really hard time trying to trade trends. And I know that might sound weird, but as a balanced trader looking for value, trying to trade trends can be impossible. At least for my little pea brain to comprehend. This is much easier. I don't have to pick a direction. I just have to trade what it gives me, as long as it's not bouncing all over the place. And no, I'm not trying to explain my expenses away. I'm not trying to do anything else. I'm not trying to, you know, not take responsibility for them or anything else. It's I'm doing something that I haven't done before in this particular market, and I don't know how the market behaves in this time frame. The time that you trade is so important. I mean, if you're trying to trade momentum between 11 and 1 o'clock, the New York session, good luck. I wish you all the luck. Yet again, though, if you are trying to trade, if you're trying to trade momentum at, let's say, 9:45, well, there you go. Or even power hour that they call it now, between what, 3 and 4? Is that power hour? I think so. 2:30 and 3:30, whatever it is. I don't like the 4 o'clock thing because you need to be out of the market by 4:15 anyhow. But when you put all of that into context, right? That's a really good time to be trading. The NASDAQ, 7 p.m., because of the jumpiness, may not be a good time. And it might just be today's price action. I'm not sure, because I don't have the experience in this market. Am I worried about the expenses I've taken? No, not even a little bit. Why? Well, let's see. I pulled 189 out of the market, 177 points, 177.5 points out of the market today. I had 650 handles yesterday. Trading one contract. 650 points out of the NASDAQ. Because what happened to the US session yesterday? All day long, there was periods of momentum. I just kept hitting the periods of momentum. Am I a full-time trader? No. Nope, not right now, not yet. I have been. I was a full-time trader for 12 years, basically. That was full-time. Didn't have a job per se. I did some consulting during that time period, but that was more of a hobby and helping people out than it was actually doing consulting. So for 12 years, I was a fully funded cash trader in my own personal accounts. And yeah, and what got me out of it, well, part of it was COVID. The volatility of the COVID markets was just absolutely horrendous and crazy. I was an ES trader, and it just was not something that I was able to execute, very similar to what's going on with this tonight. So I just got out of trading, and that was in May of 2020. And I'm just now this week taking my first trades again in the markets. I haven't traded them for almost 6 years now. what got me long there? What got me long here? Just a potential breakout. Potential breakout to the downside is all that was. Yeah, no, it's not working out very well for me tonight, is it? We'll see. We'll see what happens at 8. Yeah, I got filled at a price that I hadn't even traded at. It's always nice. It's only happened to me a few times. I'm very, very, very volatile, illiquid contracts, like trading oil at 5 o'clock in the morning. Yeah, I've done that too. When it comes to the markets, guys, you could think I'm crazy, and I am absolutely. That's why I'm still trading this right now, because I'm certifiably nuts sometimes. It's funny. I listen to people, but sometimes I'm just listening to the words that are coming out of their mouths. I'm not putting it into the context of, oh wow, maybe I'll listen to that, maybe I'll apply that. And so one of the things that I would always hear is, don't trade during news, don't trade during news, don't trade during news, don't trade during news. Trade through news all the time. At least I did. Of course, it's been a long time since I've traded. So, and we're going back to a break even. It's going to stop me out. I'm only going to a break even because of this. It popped, right? I have to go with the move that it gave me. I can't go with, and if it was there in the US session, right, it wouldn't have popped down that much. It might have gone like this, but I'm already into profits on the position. Now I'm up here at 95, 75, 96. This is nuts. It's a good science experiment of what what not to do. Trading at 8 o'clock last night did not do this. Let's see. Right now I'm down 45 points. Whatever. I'll make that back. Yeah. And it's funny, right? Because I'm down 45 points right now, and I haven't had, well, I had that one very small positive trade. But if you think about it though, right? 1, 2, 3, 4, 5, 6, 7. This sounds like the count. 8, 9, 10, 11, 12, 13 trades. 1 revenue. Seriously, I'm only down 45 points. Oh man, my one revenue is basically a break even. It wasn't even revenue. See, I do. I love this style of trading. No, it doesn't faze me. But I definitely don't like the just a second. Yeah, I mean, this right here could be another breakout. I mean, we've got momentum, right? We have momentum. We have momentum. The problem is the momentum is volatile, and it's volatile because no, is it because there's no volume? Look, um, I do order flow stuff at times as well, depending on market conditions and what's going on. And so if you ever want to look at order flow or you're interested in that, come over to the Purple app, or YouTube. You'll get the full screen instead of the little tiny TikTok screen. But you can't see anything. I got to keep this chart up so I can watch what's going on while I'm looking at all of this. And yeah, I mean, we got a lot of very, very, very low volume print. I mean, and a down move, a lot of gaps, a lot of those things. We'll get some gaps like that in the New York session, but it usually doesn't pop back on us hard or get us in here, or we get a feel where the price hasn't even traded at. Ridiculous. Whatevs. Still so jumpy. Well, good. Hopefully, it doesn't work out for the 7 o'clock time frame, and I can go do something else until 8. Oh man. Yeah, there's a lot of gaps. There's a lot of just funny business stuff going on. No, I don't. Look. Do I do I pay attention to the funny business in the markets? No. No, I don't. There is a conspiracy theory written under every rock. There are, I almost tried to buy that. I would have been filled up here, wouldn't buy any else. Doesn't really matter. That's a perfect entry though, right here. Love that entry. And so what would happen if I was trailing the stop? Right now, my stop would be break even, but I would be entered up here, not down here, right? But let's say it was a normal New York session and I'm entered here and it's trading up here and it's not doing all the bouncing that it's doing. I'd have a 2201 stop right now, waiting for price action to break. Okay, we'll stop right about here to 203.75. See if we continue to go into the 210s and the 212s. Nope, stopped out. Would have been a small revenue, but my fill would have been way up here anyhow, so it wouldn't have, probably right about here in this area, but still it wouldn't have moved enough for me to be able to do anything with it. No, not every time frame or period, market period, is a good time for the methodology that you picked. You have to find the right times. You know, it's great volatility, but you can't trade volatility. You need momentum for this methodology. So no, I don't subscribe to all the conspiracy theories about the markets and that they're all rigged and everything else. And this is why everything in life is rigged. Everything. And so rather than looking at things being rigged and it's a conspiracy and they're out to get me, I look at it as an opportunity. Okay. And how could it be an opportunity? If it's rigged, it means that there's a process, a methodology to it. And if there's a process and methodology to it, then there's a rhyme and there's a reason to it. And if there's a rhyme and there's a reason to it, then there's a level of consistency that goes along with it. And if there's consistency that goes along with it, I thought this broke. Did that not break? Yeah, I'm still taking trades. I'm trying to see if there's something in this market that it will give me to show me that this is workable, because it boggles my mind that I can't do this in this market. It infuriates me, actually. Not to the point where I'm emotional or anything along those lines. It's just, my God, this has to be possible. And it's just not. Conspiracy theories, right. I got off track, I'm sorry. I'm like, Pearl. If there are conspiracies and the markets are rigged and all this other stuff, right? That means that there's a methodology to the riggedness, the conspiracy itself. It means there's a method to the madness. Where there's a method, there's rules. Where there's rules, now, you could say rules were made to be broken, and some people would frown upon that in this establishment. But if there's rules, they could be massaged. They could be exploited. And so, if the markets are rigged, please, 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 please stay with the status quo and keep them rigged. Don't mess with something that's working. Because if you mess with it, you just might break it and it stops working. I am not interested in going through the whole market thing again and trying to figure out another methodology. Even when my method is broken in this market. Jesus. This one didn't pop, so I'm trying to hope maybe we get some actual real price action with it. Even though, you know, my entry should be someplace around 75 or 97, and I'm down in 94 range. It's a 3-point swing. It's like slippage all over the place. Ridiculous. I am not impressed with this market right now. Not even a little bit. But yeah, no, I mean, I don't subscribe to a lot of things. I trade through news. I do all the things that people tell you not to do. I take 17 expense trades in a row. Oh, good times. It makes me laugh when you say it out loud, you know? You don't actually think about the implications of what's going on until you say something like that. And it makes me laugh. I think it's funny. It's not that I don't care. It's that I'm at the mall and I'm shopping right now. All I'm doing, I'm just shopping. I'm trying something on, and I'm not going to judge myself for my abilities to trade. You guys judge me all you want to. I don't care. Right? I don't care. Why don't I care if you judge me? Because frankly, I judge myself enough all on my own. I don't need any help with that from anybody else, not even the slightest. And so, what people think about me is none of my business. And if I don't hear the judgments out loud or, read them in comments, whatever, you suck. You're a terrible trader. Yep, 100%. Thank you for the insight. Because that's so insightful. Or, oh my God, Gamma and Delta is telling us that, this is happening. Okay, good. Have fun with that. I'm grateful that that's your methodology. I hope it works for you. I really do. Because I want everybody to be successful. Just don't compare the way that you view things with the way that I view things. We all have different tastes and preferences, and those tastes and preferences are correlated to the way we trade. We're all different. Why do we have to judge people through our own lens? Why can't we accept that there's different lenses and see the beauty and the magic in each lens rather than a minor defect that we see as a glaring one? I'm in a really good mood right now. This doesn't bother me at all. I'm ready for the London session to open. Bring the London session. Let's see what happens. Hopefully better price action. I mean, I'm grateful. There's a lot of volatility in this market. I just wish it was smoothed out. We need to put an indicator on price is what we need to do, and not like a moving average. I'm talking about we need to smooth out price. We need like a Renko bar or something. Oh my God, that'd be so terrible right now. A range bar or Renko bar. Geez, this whole thing would be done in one bar and just one tick. It would be terrible. You'd have 6 bars printed. I mean, I could smooth it out with time, right? What's the best way to smooth out price action? And it's through time. That's the answer. You smooth out price action through time. And so, I don't know, is it better from this perspective? Look and see. Wouldn't think so. Because bounciness is going to happen anyhow, but it's worth a try. I mean, you never know until you try. I mean, how would I know that the Asian session is bouncy in the Nasdaq at the open at 7 p.m. if I don't try? Yeah, because the ticks here would have gone in the same way. My fills would have been at the same prices. Doesn't exactly matter. Yeah, no. No. It's so funny. I was like, oh yeah, watch. Watch how great of a professional trader I am. That makes me laugh. Oh, jeez. I don't know, what, 14, 15 expense trades in a row tonight? Fun. Isn't it fun? 3 minutes. 3 minutes and hopefully it all changes. I'll tell you this much, since I've been back trading last week, I haven't had an expense session yet. So this is gonna be my first expense session. Look at that. It's already gone. Oh, already gone. You know what? You know what? Hold on. Hold up. I think I might have an answer. Think I might have an answer to my problems in this market. I mean, we just went from 92 to 86. So it probably isn't an answer. So dumb. And, you know, it's not any reflection on the demographic of where, you know, the session is located either. I lived in Japan for a year. Singapore is one of my favorite places I've ever been. In Hong Kong, the Kowloon side, looking out over the Bay of Hong Kong. Oh my God. And then the lights reflecting from all the buildings and the skyscrapers is one of the most magnificent things to see. And then, of course, Chinese New Year's with all of the fireworks and stuff reflecting in the bay. Oh, just gorgeous stuff. Let me try something. I want to try. Just give it to me. I don't even care what happens to the position. Just give it to me. I just want to try something. Let me try. I'm gonna give us a little more room too. I don't even care. I'm gonna just, you know what? I'm gonna put the stop down here for right now. I don't care. Because I'm trying stuff on. Okay, good. Now we're in the London session. Oh man, it's still jumpy. So jumpy. And no, an entry long here is not something that I would do on a normal market. Leaving a stop down here at 62 isn't something I would do in a normal market. I'm trying something. I'm trying to figure out a way to make this session. This is my little science experiment right now. So jumpy. Broke the low. There's your buy. In here, look for 94. Does it react? Back into the area, same area of support. And go into an up bar. Sellers are strong. Resistance here at 88 and a quarter. Resistance down here at 86. So it was once resistance could turn into support. 86 is now possible support with the resistance a little bit lower. I'm sorry, a little bit higher. Price action came up. The top of the bar immediately rejected, could not break the higher high or create a higher high. Market price action is extremely weak. Now, does it still pop around? Or are we going to get some directional movement? I usually wait for 15 minutes for these sessions to populate. Wait and see what happens. So these last two positions are not something that I would normally be in for, you know, these types of directions. I'm trying to figure out what is going on in this Asian session. I know last night was pretty smooth, but London just opened and it's not a lot smoother than the Asian ones. Times. Good times, good times, good times. Yeah, 1,000 paper cuts, right? Death by 1,000 paper cuts. 100%. Yes. But in normal market conditions, though, right? You'll take a bunch of paper cuts, but there's a bandage on the other side. There has not been a bandage so far. And it's not because we haven't had move. You know, we've had some pretty good wider bars where profits, should be. I mean, I didn't enter down here. I entered up here. There's room for profits to that you can't get when it fills you down here. Or I'm going long and it fills me at a price where it didn't even trade. And see, this is smoother. This is tradable. I wish I wasn't in this position right now because this is showing signs of being tradable. $100% tradable. Yeah, would have loved to have been long there. So let's check this out. Okay, long, right down here in this area. Stop right now is at break even. It'd be a little bit higher, but whatever. It would be no worse than break even right now. Stop just below this low, and there's your stop. Still fairly direction. Do I have to be in prior to the areas that I trade off of the New York session? Do I have to be in earlier in this market? Try it and see what happens. At least it's not as bouncy. Always a good sign. Okay. Don't stop me out. That's working better. Okay. Now, if I enter around these other areas, how do I manage my risk as well? Because in the US session, that would be where I would want to be in a short. Now it's going in direction. I stop. Trail. Looking for the low to be traded to again. Waiting for it to break a low. Give it a little bit more room because of the choppiness. Moving back into value in this overall balanced range. Balanced ranging condition. Tools. File. 72 possibly. Now I want to be at a break even. In fact, now I can bring my target down to about this area. Still not anticipating a directional move though, because this area of balance that we're in the Asian sessions are known to be more balanced than they are directional. Okay. I think I may have my answer. I could theoretically all right, let me look at order flow real quick. Don't think order flow is going to be my answer here, but I could do this, move a stop right down below these lows, give this a little bit more room, and let her come up, let her do her thing, breaking highs, looking good, whatever she's doing. There's your highs. Now we can move our stop. Want to move our stop up to here, move our stop a little bit higher, looking for a potential 04.5. Beautiful, much better. There was 10 points. Okay, now I don't want to try to trade out of this range here because we're rotational. But what I do want to do though, 08.28. That's possible to do, but that would be a full 20-point expense. If I take a full 20-point expense, I'm only looking for 10 points. The range is too tight to actually be trading. However, I think I can do it another way. My highs at, where are my highs at? There's that high. Come on, a little bit more, Where are you? Right here. Where is 13.5? Okay, then where's this at? 13.5 at 10. Where's, damn it. Okay, beautiful. I know what I'm doing. Oz knows what I'm doing. I'm gonna go ahead and take this position here. Should be in much higher. I'm not, and that's okay. But I have a very good idea of what I'm doing right now. Now I'm going to take one. No. Let's do and then I'm going to want to close this if that's filled. And I want this right up here like this. And now let's see if we can come down into the 84 range. We're going to break the range instead. I don't think so. I think we're going to stay rotational. Test this theory and give us a little bit more room. Entry should be right up here. Let me cancel this. Let's do one. There's the signal right there. Now we're short, right where I want to be. Now based off of that price, we got 20 points. We can move our stops down to here, looking for rotation back into the 84, 80, 76 area. And let's see if we get a rotational market to the downside. I would have liked to have been in around the 212, but I already had that short in there. Let's see if we test this high, or if we come back down below value area low. Uh-huh. There's rejection at the highs. Price action just filled below the close for the first time. Now we're back below value area high. Didn't hold it immediately. Book this entry here, which I could see. I could see why we have that as support. Need to get through that. We traded down to VPOC this time. Beautiful. Not ready to move my stop yet, but I will be here shortly. If we can get down to a little bit more lower prices, test the high here. Where would I anticipate this to be tested into? 17 and a half. 17 and a half, possibly into 22, and potential rejection from those two places. Price action could act as a magnet into those two areas, so I want to keep my stop above them instead of bringing the stop down. Much less jumpy price action here. This is 100% tradable. Rejecting the highs here didn't make the higher highs, coming back into the support, coming right back into value area high. Price action still not coming down, but keep testing the highs. We're going to break the highs. The highs can be broken up into the 1722 area, potential rejection points to bring price back down into the 08.5 area, possible rotation back into the 83 area. If price is rotational, we're going to come back into the value area low range. If not, we're going to create a range extension above the 2024, which could turn into a potential breakout that could be a failure moving back into value, or subsequent trend condition upwards into the 28s, 32s for range, for a potential breakout and moving into higher highs. That's what's happening here at the moment. And now the question is, what's going to happen in current price action? Current price action is telling us that buyers are in control at the moment, and that we're rejecting off of the 20 area, which is one of the areas that I was looking at for potential resistance. But price action is not actually breaking lower. We have a lot of wicks, which is telling us more rotation. We're in the Asian session right after the London Open, which is expecting more rotation. I would say it's more higher probabilities that we rotate back down into lower prices, into value area low, rather than actually creating a range extension to the highs. We just now got below VPOC, but we didn't hold it. That's an area where I could look at taking some risk off of this position, but we're still showing that buyers are strong in the short term, even through the rotation back into value. And we could be holding VPOC as support right now at 200, which means I want to give this market a little bit more room, because value is still being traded, but buyers are currently in control. I need to see what they do at the highs. Do we get acceptance to the higher highs, or do we see rejection? Because if we reject the highs, we're going to retest the low, and that might pull us back down into the 29.81 range. Has anything moved? Nope, stayed the same. Okay. In this last bar, current prices here. Current prices here. Why am I? Oh, I don't understand. That's why. That's now okay. Beautiful. I'm going to stay on this time frame. All right. So we do have the rejection higher. We have resistance at 15, 14 and a half, 15 range. That resistance holds. We've got support at 08. We have a little bit more support around the 01. And then we don't have support again until 95. 95 puts us right below VPOC, right into this area. That would be a range of looking for to potentially do exactly what it is doing right now. Now, do we hold VPOC? Do we hold VPOC or do we bounce right back into it? Perfect. Now we're taking risk out of the position. Taking risk out of the position. In fact, at this point in time, there we go. And then we flatten it here for potential profits. I'm not going to do that though, because I don't have limit orders and stuff in place at the moment. But that would be the target for rotational trading. And that's how you trade balance, ladies and gentlemen. This is brought to you by Auction Market Theory. Should just move my stops down there. I didn't even think about it. Whatever. In my trading career, what's the largest size I've ever traded? 25 lots in the ES and 18 lots in the Russell. And I would have traded more lots, more size than that in the Russell, but I couldn't because I started to get slippage on the entries. Okay, so what I just did there, right? When you're looking at trading these ranges through here, and if you look, right, all my shorts and stuff, I'm taking very, very, very small losses. If I extended those range, there was room for potential profits in here. Okay. I traded this session like it was the New York session, and that's not going to necessarily work. So I adjusted my methodology based upon the new information I'm receiving, and that's exactly what I just performed here, right? Nice little performance. Got the rejection I was looking for, talked myself through it, knew exactly where I was going, what was happening in the trade at all times, completely trusted my ability to read current price action and what it was doing in the context of overall value. Price action couldn't have done anything that I wasn't prepared for it to do at that point in time. And now with that position right there, I'm only 70 points down for the night. Let's see if we can change that. We're going to do this again. We're going to roll it back. We are going to roll it back. And I'm rolling it back. What I'm going to do is I'm going to go ahead and buy here off of this, moving my stop down to here. And I'm looking for it to come down into these areas right in here. And if it does, then I'm going to be adding to the position and lowering my entry. My entry will be someplace hopefully down here around the 77 range instead of, the 81s, 82s. Where's my entry at? 84. 84, hopefully that would drop me down to about the 80s. If I can get in with an average price around 80 with 2 contracts, now I'm targeting 200 and 205, looking for another rotation back to the other side of value. Let's see if we get it. I want this to come down into the 76s, 72s. That's where I'm going to be looking at possibly adding in for another buy. Excuse me. Hold on. Directional down, 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 down. Directional down, sideways price action with the potential for a downside move. For a continuation to the downside. And I'm currently long a contract. Beautiful. Bunimus, Bunimus, Bunimus. Got out of my short too soon. But that's okay. And it came down to the 76 too, didn't it? Doing too much analysis, not enough trading. All right, let's see if we get back over to our entry point right now. Because the entry point now should be around 80, because I should be in around 76. Maybe he'll give it to us. This one has a higher probability of stopping us out than we did up here, so I'm going to be a little more aggressive on my stop on the buy side than I was on the sell side. We got back to our entry price for the first time since we've been in this position. That's always nice. And let's see if we can get some continuation to the 200s. Looking for a move back up into the 96s right now before I actually make any changes to what it is that I am looking at here. Yeah, it would be nice to have that fill at 80. Or the second contract off here around the 76, bringing this down into the 82s, 80s for an average price. Price action is much more tradable. I'm going to be here tomorrow night at 8 o'clock. Hope to see everybody. But I am not going to be trading at 7 o'clock. Get that. I can't even trade value in that time frame. Move my stop up a little bit because we are seeing some rejection in here, and quite frankly, if we get down into these lower areas, I'm going to want to be short anyhow because I'm looking for a possible continuation to the downside. And if I can get a good enough continuation to the downside, we could be seeing definitely the 20s. And there's a chance I could become profitable for the night. After all of that, there is a chance for potential profits in the markets tonight. Imagine that. Break this low, I want to be out. I want to be out if you break this low. Yeah. I want to put my stop there. You're going to break this low, aren't you? Stop here. Bleed out risk. Wait. What is this? No. So it's crazy, right? When you have everything set up. You have everything set up and ready to go, and then you change your trading style, and your dome, nothing is set up for the trading style that you trade into. So I'm going to have to add this 81. Where's my entry at? 82. Yeah, let's move this. This we can get more room. Screw it. Coming up here in case it decides it wants to trade value. I don't think it's going to, but that's where I'm going to put it. I'm not going to take that full amount of a risk. That's not going to happen. I just want it sitting there out of the way in case we do trade back to VPOC. And if we do trade back into VPOC, I'm only in one contract. I'm going to add another and get myself a better average price, being able to manage the risk in the position better. This is a continuation play for a possible breakout to the downside due to the rejection from the highs and not breaking them, and the subsequent move down from the New York session, moving into the Asian session. A nice little bounce of value, anticipating a possible value break. That value break probably isn't going to happen until around the 60s, but does expect a pullback and then a retest into the lows. And if that all happens tonight, we will end the evening profitable. And if it doesn't, well, then we'll just go ahead and continue trading value until that happens. We'll have to manage this short trading around value, anticipating it to come back and test into the highs. And we're going to do that by averaging ourselves into the market. Oh, look at this. VPOC just shifted. I didn't even notice that. VPOC just shifted way down. Okay. That's actually a good sign for the downside at the moment. See what happens. Sorry about that. I did not mean to do that. Trying to break things. Yeah, it's been a roller coaster of a ride night. I was not expecting the open of the Asian session to behave as poorly as it did. That was not my anticipation. But you know what? We switched gears and we're recovering. And we have a plan for continued recovery. What else I want to look at? I want to look at something else too. And remember, if you want to see the charts on the right that I move over to that you can't see on TikTok, come on over to YouTube or the Purple app. Come out. Huh. Interesting. Nope, not telling you what's interesting because I have to keep these charts up. I made that mistake the other night. I switched my charts around and I missed out on a couple positions because I had this chart covered up and I didn't see what was going on. I missed out on one position. There was a position that I entered that I shouldn't have. See? Trying things on. You learn. You learn your likes and your dislikes and your taste and your preferences, and you start getting a style. When you have a style, you know, a bit more professional. Even if your style isn't professional, you're still a bit more professional. Trusting yourself, feeling comfortable in your own skin. New York session's so much more fluid. I think I might just have to focus over there for a little bit. I haven't even traded that live yet, guys. I am not saying anything because I just jinxed myself tonight. But no, the New York session has been going pretty well for the last week. Extremely well, actually. And now the momentum is gone out of the market. So there's no more momentum plays at this point in time. And so I'm really just going to trying to short an unfair lows when you're trading a rotation is not what you want to be doing. So I'm going to have to save this trade, this position, by dollar cost averaging myself into the market. Dollar cost averaging would be an investment term, not a trading term. Sorry. I was a fee-based financial advisor for a while after I got out of the military. I was in 3 branches, actually. Active duty 2, reserves 1. I was confused when I was younger and slept around. Don't judge me. I started in the Marine Corps, got out in '99. September 11th happened. I joined the 101st Airborne Division, went to Afghanistan. You're not prior service, and you don't go in after a war has started, not expecting, what to do and where you're going to go. So I asked for it. And then I got out of the Army, was going to have the military pay for my law degree, but started listening to a bunch of journals and other individuals and listened to their war stories about their private practices. And I was like, no, I don't feel like being an ambulance chaser. I didn't score high enough on the LSAT in order to go to a D1 school. It'd have to be at best D2, probably D3, based off of my LSAT scores. And so I decided not to pursue my Juris Doctrine. No JD for me. And now, a little late because I'm telling stories. That averages us in a little bit better. Stop up here. Not a lot better, but a little bit. We might add one more if we get a little more of a higher price, just to bring that entry back up a little bit more, because we're going to be targeting the 180, and I'm going to leave a runner in case we break out to the downside. I'm not expecting to break out to the upside because we are in a short-term trend down. We are in balance on the daily chart. We are coming off a value area low, which means we could have the expansion, but I'm not anticipating a break in the Asian session for a trend to the upside when we're carrying through a lower imbalanced market condition through the US and Asian session. I'm not expecting a trend reversal in the Asian session. If anything, is going to be a resumption to the downside or a continuation of value. And right now, I'm expecting a continuation of value. And we are going to add another one right here. Not quite where I wanted to add it. We are going to add another one. I have one more area to add one more. By doing this too, you don't you don't run the risk of picking up slippage on your subsequent entries. And this is how you try to trade yourself out of a hole that you create for yourself in the first place. Because you're trying to trade a methodology in a market not designed for that methodology. And it might be, because I did well last night with it, it might be built for it. But trading that 7 o'clock tonight really messed with my mojo because of the way that the market was just bouncing around. Did not like that at all. Oh, anyways. Let's see, do we get up here? Do we get up here? Do we get up here? Oh, almost there. Almost there. I think close enough. And that's going to be last entry, short side, and now it's going to do exactly what I said it wasn't going to do. It's going to break out of the So I'm going to need to be a bit more aggressive on my stops here in a little bit because of the risk that I'm holding now. VPOC down in the 84 range. That's interesting. But we tested highs, rejecting the highs. Need to get back below the 04 if the shorts have any chance here to do anything. Anticipating 08.5, 12, possibly 13 as areas of resistance. Support now is going to be around that 80, that 08.5. Let's see here. We're back up here into the 11s and 12s. Let's see if we rotate back into the 08.5 and then see how we feel around the 08.5. Not feel, but fill. Yeah, see, that was extremely strong rotational movement higher into the 16s. We have areas of rejection, but she's accepting up here, accepting the higher prices. We're down through that area of support, which is now going to be resistance. But we have to get into the 8.5s to test. Test the 8.5s to see if buyers are still there. There we go, traded through it. 875s would immediately like to see a lower filled price. That's nice rotation to the downside. Doesn't mean it's going to continue to go down. It was a nice rotational movement down. We need to get below value area high this time for a chance for this to work. Hitting it as possible support at the moment. 08.5 should act as resistance. 12.5, 13.5 should act as resistance again, with 805 as a possible support in the market if we do rotate back up into the 13, 12.5s. Yeah, I do have order flow up, a type of footprint chart up, but no, I'm just picking that up in the rotations of this time frame of these candles, just in the way that these candles are rotating. Yeah, I told you guys I've been trading for a while. This isn't my first rodeo. You know, I just was not expecting the type of price action that we had, and I was not expecting this market to stay in an absolute rotation either because of the down move from the US session. I was expecting a little bit more of a continuation to that. but we're just stuck in sideways price action right now. And I'm feeling like price has a higher probability of breaking these highs right now before rotation back to the downside. And if they break the highs, of course, they could just go ahead and continue higher. We could have an imbalanced session to the upside. But the way that the trend is, I'm anticipating if we break these highs, we're going to have a failed breakout or a failed range extension. What's the difference between the two? A breakout is an intraday bar or bars where the wick trades through these highs. Where a breakout is a close above those highs. Two different scenarios and situations. Let's see if this gives us any different perspective. A little bit. Not much, but a little bit. That actually moves our value area high up. That's a better profile than the one that I had originally drawn. I originally drew. There we go, I can speak. English is my second language, so bear with me. What was my first language? Duh. And yes, I laugh at my own jokes, and I don't care. You don't have to laugh at them, but I will. They're a Blink-182 song or something like that, where it's laugh at all my dumb jokes when no one else does, or something like that. All the small things, isn't it? All the small things. I can't sing, by the way. You can tell. Sorry if I made anybody's ears bleed. It wasn't my intention. I forget sometimes. No, it's so funny. I am so afraid of copyright strikes and all that other stuff because of the other work that I'm doing too with the return, that I don't like to use Spotify at all for any of the music because I am streaming onto YouTube and I don't want copyright strikes or anything like that. It's just not worth it. But Pretzel isn't exactly the best music either. But we can put that on. Especially since I could be trapped in this trade for a little bit. And we can't get back below value area high. If we break this low. We can't even get back into 08.5. This is going to break higher. Just because of the sheer amount of bars that keep on testing the high. You test highs enough time without testing lows or lower lows, eventually the market's going to break out to the upside. I'd like to reach out and touch the Nasdaq tonight is what I would like to do. But it wouldn't be a touch as nice as what this girl is talking about though. Yeah, exactly. Be straight up S&M. Be a salt up in here. Yep. E. Oh man, that's funny. That is funny. All right, let's see if we can get back to our entry point and I can start taking some risk out of this position. Still anticipating some rotation. What am I in? I'm in 4 contracts. Jeez. That's not not a lot of size. I'm not even concerned about it. It's just I had to do that in order to possibly salvage my knight in this trade. So let's look at 86. We're gonna do 29186. We're holding figure too, aren't we? God bless it. Figure is it's the even numbers, the whole numbers, you know, the 29,200 and 29,100 and so on and so forth. It's actually act as magnets in those areas. Sucks. 86 to yeah, that's not too bad. Let's see what happens here if we do this. There's one. Then I want two at 66. Oh, don't like that bar. Don't like that bar at all. Go ahead and just put one. Where'd it go? Okay, it's this order right here. Right, I have to do these manually because I'm not set up to trade value in my dome or my automatic positions. Yeah, this is going to come out and break out of the highs. We will be stopped out of this shortly. I could lower my stops now and take less of a risk, but I've already risked this much at this point in time and held on to the position this long that I might as well make the market prove me that it's going to break out. Our chance for lower was here, but we made a higher low. And making that higher low and then closing up off of that wick or closing up above the low to create a wick, that is not good signs. And this is where we're going to start getting a range extension. If we break out of here, we'll start getting range extensions to the upside with some momentum. And that's when we can start putting in some momentum trades. And yeah, I am going to continue to trade this. I mean, this is practice for me. This is how I'm going to be able to know if I can trade this market or even if I want to trade this market. Yeah, we just got out of one there. Out of the two sessions between yesterday and the New York session and the Asian session, I'll still be up between the two sessions, even after these 4 contracts. But it's going to be very minimal. I'm going to be up like 10, 15 points is all. But I'm just going to go ahead and continue to trade this. You know, this is how I'm really going to learn this market. No, thank you. And this session. I might not. It's almost 9. Little reggae. I want to see how this market behaves and reacts around the highs, though. Really do. Let's go ahead like this. Let it stop us out. Whatever. What's going on? Goodness. There's only 3 of them. Just, yeah, whatever. Want to try something here. I really want this to stop me up. That's what I want to do right there. So let's go ahead and cancel all of these. Now we're up, we're up, we're up. Move this to, I don't like the jumpiness. Damn it. Move stop to break even. We have a free trade. We like free trades. We can get a free $100 or so. We can break out of this high a little bit higher. Not jumping around. Let's just go ahead and lock in a little bit of revenue. Still jumping around. But that's the breakout. That's the breakout of the range. And we see some follow through. That's good to see and good to know. Value rotational trades. Value trade here, 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 value trade here. Possible value trade here. But what's the difference between this and all of the other positions? Continued closes at its high. Close here at its high. Huge down. You can short through here. Here, close at its high. Short down. You may have got in here. But if you did, you got in right around this area at 11.5. And you're able to easily manage your risk up to the high. And so that would be your expense trade for the night. And each one of these rotations from about 10, and this was around 75, wasn't it, to begin with? 35 points. And the rotations, beautiful. And there's the stop out for a little bit of revenue, up 15.25 on both sessions. I would have stopped trading a long time ago, like in here. Once I saw how price action was behaving, but I really wanted to just continue to trade to test this out, see how I need to trade the Asian session. I appreciate you being here tonight. I appreciate you living through this experience with me. I am not upset by the performance of tonight at all. A new market time that I may or may not continue to trade. I really do like the New York session, and I like the flow of that session, and I don't get any of these jumpy bars. This would be a reason to short. I just don't feel like doing it. I'm gonna do it anyhow. Again, just trying to get a feel for this market. What's creating the what prices and what areas do we get possible I can't even think right now. Do we get possible momentum into the market? And how rotational is this market as well, comparatively to the New York session? Do we anticipate range extensions and range extensions turning into possible trend continuation in the Asian session? Or is it more probable that it's going to be more rotational? And in a more rotational market, instead of trying to break out of the highs here, do we try to go back into a rotation or a failed breakout type scenario? And these are things that I just don't know. I can go back and look at past charts, but there's nothing like live trading to tell you when you're right or wrong. I much prefer to test things out in live trading than I do in going back and looking at charts and stuff. That's just me. Mm. Mm. Yeah. Very, very whippy. Yeah, it probably looks like I'm over trading right now, and you would be 100% correct if I wasn't doing this for a reason and testing scenarios. You know, that's one thing that you have to realize right now. I'm testing a trading idea within a live market condition, right? And I transferred methodologies live, right? I'm still being very tight on my risk parameters, and look at these last couple of trades. You know, they haven't stopped me out. I mean, they haven't stopped me out for expense trades, right? Very small revenue positions. And now this is the first time we've actually had a range extension bar that has done something. And this might be the day that, you know, the market completely shifts from the consolidation it's been doing, from the counter trend of the daily balance and moving back into daily value area high on conditions. You know, this might be that market shift. And market shifts are at times very, very difficult to trade. And so there, you know, 23 to 30, you know, there was another 8 points. So still up for the 2 sessions. To have revenue in the 2 sessions for the way that I've been absolutely whipsawed in this market, you know what? I'll take it. That doesn't bother me at all. And for me to notice value the way that I did, to be able to interpret that, take a couple of trades through that value, in anticipation of the continuation of value, to be able to switch conditions again when we started to move into this more of a trending condition and trading that now. I mean, I don't know, guys. Yeah, I absolutely got chopped up through here 100%. But I have learned a lot. I have adjusted. I haven't gotten upset. You know, I haven't had a return. I haven't had to do anything because I'm in a really, really good place, because I trust my methodology and I trust myself in order to be able to trade it. Listen to something good. I missed it. Okay. That's all right. A little bit late. But now I'm anticipating this break higher with some momentum now because of the way this bar closed. Best maybe into here. Best maybe into here, but not much farther. And I anticipate this to actually go and to have some legs. Extend back up, and we could see the 29,300s. We could see the 300s tonight, in my viewpoint, from this move. I could try to give it some room, but I really want to. I want to trade this as I would for my momentum trading. I really want to demonstrate that and show the power of these tight stops. You know, this one just came back and got me immediately, so I had to re-enter. And it might too be that I'm going to need to give this session a little bit more room. I don't have to give the New York session more room, but I might have to give this one a little more room if I decide to continue trading it at all. There we go. There we go. Go ahead and move the stop. I'm going to give it a little bit more room. I don't want to, but I'm going to. Because I really don't want to get stopped out on it again like I have been. I really see a direction for this position and the reason to be in that direction, and I really want to try to stay in it. Now we're failing to break that high. This is where we could have a possible okay, beautiful. Now, not too much, but just a little bit. Just a little bit, and if we break this high, I'm going to move the stop just below the low of this current bar. We have to break the high again in order to do that. Trying to give it a little bit more room. Trying to talk to you guys about my thinking and reasoning. Not because I'm upset or, you know, I'm worried about losses or anything else. Again, just learning how to trade this market session. Session, that's the word that I have been looking for all night. We're starting to get some volume down here, and these lows, she's going to break the downside. Nope, she's not. She didn't break the high there. I need her to break the high. There we go, equal the high. There we go. That was nice. I should move up a little bit more. Move just below the close of the previous bar. Giving her a little bit more room because she's being testy. A little unstable tonight. A little unstable, and she didn't even get me a Baba. Sad. I believe I got this chopped up tonight. Yeah. I just, you know, the only reason I mention that is I'm just looking at my trades and like, man, they just got absolutely bamboozled by this market tonight. I was not expecting that. And so we're back up 20 points on the two sessions, $400. And ladies and gentlemen, I think that's going to do it for me tonight. I mean, we do have another position here now too, and we haven't made it any lower lows at all. And so maybe that's one of the things that I can do as well. Once you make a lower low, be out, but not until a lower low is made. And so this would be the low for this bar. Let's try it, see what happens. And of course, you know, I'm not making these rules of saying, okay, you know, I'm going to do this every single night. What I'm saying is, what can I do to start piecing better rules than what I used tonight? Because what I used tonight did not work well. So I need to make adjustments. And there's no better way of making adjustments than at the live edge of the markets and actually trading it. Move this to break even. I'm going to let this come. I'm going to let this move a little bit. I'm so tired of just, you know, getting stopped. And give it some room. Not a ton of room, but most of the time my stop will be in here around the 52. But I mean, we're only looking at 5 points at that point in time if I do get stopped out. It's so rotational in its choppiness when it comes, you know, when it on the retraces. I have to give this market a little bit more room to breathe, which is so weird. You would think with the volatility of the New York session, and I think it's because this market's so thin. So stop now, if I was following this, the lows would be here. Barely broke that high, give it some room. I could definitely put my stop here at 53.5, but no, not with an entry at 24.60. Now, if I was down here still at 39.5, then I could look at, 54, but not even 20 points. Oh yeah, she's not moving near as much as she does in the New York session per bar. That's the other problem too, the ranges. I should probably do a range analysis on this market in the Asian session. That might be helpful, because if you notice on my daily chart, right, this is not volume. This is average daily range. I'm taking the average daily range of each bar to give me an idea of how far I anticipate the market can go in a directional move. And then I put a 1 period moving average on there, so I can see the average going back. Oh, it's not a 1 day. What is it? Not a 1 period. I don't know. I don't remember for a moving average. You see, this is what I was talking about tonight, right? The daily chart coming off of the value area low. Value area low here. Where do we go? We went straight up. We went through Depop, right where we were looking at, 37.75. So what are we expecting to go now? At 483. 483 is the next area to look at for targets on a daily perspective. And so if you're getting in on these types of scalps positions, right, you can absolutely target these areas on the daily perspective. Now, I need my other chart. There. Now let's see this high breaks. It does. And now we're going to start to walk and let her move. Let her move. Because, I mean, this is only a 20-point move. Oh, yeah. The two things are going on. Range of these bars and nowhere near what they are in the New York session. Yeah, this methodology is not going to work. I mean, it is. It's working now, but the range is so narrow. The rotations are just as narrow. I have to give it more room. That's the only way this is going to work. So my stops have to be wider. The profit potential is less. It's an oxymoron. That is not a good, strong way to trade. Think about it. What it's essentially saying is we're going to give you less movement in the bars, but we're going to do more whipsaw action within the bars because of the low liquidity. And due to the low liquidity, the rotations are going to be wider, but the overall moves are going to be more narrow. And so, where you get a full retracement of a bar, just like we've gotten, right? Where we won't get that much of a pullback a lot of times in the NASDAQ, or if we do, we're getting a 20-30 point pullback, but it went 50-60 points in direction. This is going 20 points in direction, right, from entry, and then it's coming back 11 points. So it's already taken back over half of its move, and you're only moving a total of 20 points. No, the risk reward potential isn't there. This is why I stopped trading the ES and moved to the NASDAQ, because ES is so rotational, the risk reward ratio is just not there. Well, it's showing that it's not there in the Asian session too, at least not tonight. Give a bit more space between. There we go. That was pretty. Give it a little less room now. Yeah, I mean, this is only a 28-point move. I mean, at this point in time, this is a 70-80-point move within the US session in New York. Yeah, not near as much movement and wider rotations. That makes a lot of sense. Looking back in retrospect at all of this, it makes a lot more sense now. I wish I would have realized that back here. But yeah, no, this is a great rotational trade. I mean, a great directional trade right now, right? This is exactly what I was trying to get into down in here. Could you imagine if I got one of those in here where it only taken 5 or 6 of the expenses? All those expenses are wiped out and then some from this one directional move. Exactly what I'm talking about. This is why you can take so many expense trades in a row and then turn around and still be up. You know, my only problem is I have to go 160 points now in direction in order to break even from where I was before. And 246, that means they have to go to at least 346 and a half, and I have to figure out how to keep myself into the market in order to get there. We're up here at 95 right now. I mean, at this point in time, the only place I can actually put my stop where it makes sense to stay in the move is at 56 and a quarter. You know, 55, 75s, 55s, somewhere right around in there, because we haven't had a pullback yet. We get a pullback swing here from 95 to 46, 95 to 57. Now we're looking at 40 points. We're probably going to get a 40-point swing, so we need to be around 55. This is still going to get stopped. Oh. No, I don't like this music. This high breaks, I can move my stop to 80. So yeah, I mean that move here when I added in all the contracts, right, and the 4, that was an 80-point expense trade, and you're absolutely correct on that. So theoretically 90 points to get back to break even for where I was, I would need an 80-point move right now, which fully possible. Much easier to get 80 points than 100 points of one directional move. You know, but it's still possible. We could still get back there, and that would be basically one trade wiping out all of this mess. One, that's all it takes. One trade, one well-managed trade. You know, we used to have a saying in the Marine Corps, what's the most deadliest thing in combat? And it's one single well-aimed round at a downrange, because it's going to hit its target, right? And so this is about being able to manage these trades in such a way that you're able to get the results even when you know you're going to get chewed up and spit out, especially in a rotational market. And, you know, not every market condition is the same. Yeah, there we go. So, you know, had I not added in all those other things, trying to average myself into the into here, we'd be at 113 right now comparatively to 176 when I started. So 63-point expense tonight, which honestly, in this type of market condition and the way that things were just absolutely bouncy, in the open of the Asian session at 7 o'clock, I'll absolutely take that. That's really, 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 really good. Down session, but that's okay. The amount that I have learned tonight and the growth that I'm going through that, yeah, no, I'm good. This is fun. And yeah, I'll be back in the Asian session tomorrow night. I want to test this out again on a few nights. I'm not going to go live in this market though until I figure this out, but I will be going live in the New York session next week as long as everything else continues to move along for the next 2 trading days. But yeah, no, I'm not interested in trying to trade this market live right now. I need to continue studying it and learning. I have a feeling in a week or two I should be on par. It doesn't take me long to get this stuff figured out. Yeah, I mean, non-directional bar. I am not impressed with Pretzel at all, to be honest with you. That's why most people don't use it. I just don't know how you can use Spotify when Spotify says flat out that, you know, you can't use it for commercial purposes at all, which would be streaming, or demonetization or copyright strikes. And then of course you can use it on some apps, but then you can't use it on others. And it's like, well, if I'm multi-streaming right now on 3 different platforms, I mean, how does that work? I don't know. If somebody does know and they want to let me know, I would highly appreciate it. What the hell is this? Terrible. Terrible. This might be better than my genre anyhow. I love stuff like Blink-182, Green Day, you know, the alternative. I guess, you know, some people call it emo too. I don't know. But I listen to a lot of stuff. Yeah, I'm just kind of playing right now. You know, I'm looking for momentum. Does momentum continue to move in these directional moves in this session, or do they wilter out on the pullbacks? And we have technically here 1, 2, 3, 4, 5 waves already. in this overall position from the low to the high. And if we take a look at price action, right, we have 1, 2, and this is really 3, which makes this the key bar. And so we break through this and pull back into it. That might be a reason to actually go short and see if there's momentum into the downside. I don't know if I want to stay up that late though. I'm getting kind of tired. But this overall structure though is kind of interesting. Do we get a continuation to the upside? Do we just kind of fall flat and just trade in a straight line for a while like we did last night? At this time, I don't know. Don't know enough about this session in order to be able to say, probability speaking, what it could do based upon session dynamics. Okay, I need something else. This is not working. I'm not getting better, I'm getting worse. But yeah, I like 80s rock, of course, you know, grew up in the 80s. And then this is the key bar. So now we're range bound. Key bar is here. Oh, I need to go to bed, but I'm so interested in this. My interest isn't in the results. My interest is in just the sheer fact that, to be frank with you, I love trading. I love everything about it. There is nothing about trading that doesn't appeal to me. This is so much fun, and I feel so blessed to have the opportunity to be in the markets again. I love this. I love everything about it. One of the reasons why I want to get back into it and get back to becoming a full-time trader again. I wouldn't say tonight was a hiccup keeping me from doing that, not by any stretch of the imagination. I think tonight is a very good learning experience for me. Excuse me, in terms of how this market can trade. What is this? Well, on that note, I'm getting pretty tired, so I am going to call it a night. I really want to thank everybody for being here tonight. I hope that this session helped. Hope you got an idea of, one, what it is that I'm going to be doing. Two, that shouldn't be following my trades. This is not financial advice because I'm still developing myself, especially in this market condition. Hope you can get an idea of what it is that I am looking at doing and the style of trading that I'm looking at doing and why. and how I can switch and we can start looking at value pretty easily. And yeah, I look forward to future streams and getting back on here tomorrow night. So thank you everybody for joining. I appreciate you. I hope everybody has a wonderful night, and I will see everybody tomorrow. I will not be streaming the New York session until at least Monday, if not the following week. I'm just going to have to kind of figure out how to put my schedule together, and we're going to go about it in that direction. So it'll either be this next Monday, I'll be coming to you live from the New York session. I'm coming to you live from New York. Or we will, and then I'll make a decision in the next few days on what I'm going to do in the context of this Asian session. Am I going to trade it, or am I going to just kind of leave it alone? Do not know yet. We're going to wait and find out. So thank you, everybody. Appreciate you. And I'll keep you all posted on what we get cooking here. Have a great night or day, depending on